are live. The 10 altcoins you forgot about, plus 20 consensus and some not consensus ideas, because the 2026 preview season is in full season, where everybody who was super bullish last year now feels pressure to be super cautious this year. I'm not doing that, as you might know. I'll tell you why. We're also going to talk about privacy, because some of the guys who are bullish are like privacy coin market cap can be huge. So if privacy coin market cap goes where some of these big players say it's going to go, what are the price targets for Zcash and Monero? I can tell you right now, one of these reports came from a giant hedge fund. And needless to say, after I read that, I was like, wow, these guys must have a huge position in privacy coins. Meanwhile, if you have a YouTube channel, if you'd like to get some attention, make a video about silver. I made a video on silver on TikTok, and it got like 50,000 views. So YouTube Nation is out looking for silver at $70. At 20, they didn't like it, but at 70, it's a must add to a portfolio, most likely on its way to 100, assuming the CFTC is going to allow a bank, which would be at risk if somebody wanted silver and couldn't get it. Needless to say, that brings in the Fed, and who knows if that's going to happen, but silver is like leveraged fear. Gold is fear. Silver is leveraged fear. Fear of what? All right, so we're going to talk about fear of what. We're going to talk about why everyone's scared. We're going to go through consensus ideas, and then the top 10 altcoins that, no joke, you forgot about because I forgot about. And we're going to go through that and discuss why that makes sense. But first, I am your host, Bill Noble. Please subscribe to the channel. Make sure you hit the like button and leave a comment down below to let me know what you think about the show. Okay, with that said, the top 20 things that you've heard or haven't heard about next year. Bitcoin's current consolidation between like 88 and 90 reflects kind of a sorting phase, not a breakdown, not a stop loss point. As you know, people become a little bit more selective as to what they want to buy. True or false? Probably true. Why? Well, because people are afraid. I mean, clearly everyone got smoked in alts. Everyone, right? They left no stone unturned there. And Bitcoin, everyone is afraid of this ongoing forced selling with all this talk about 70-something. Okay, well, I personally think it was over at 80, and I am extremely encouraged based on the work that Patreon has that this thing never went down to 80 or 82, because that was the risk zone for that 80 or 70 print. Don't want any of that. Also noting on a Gann front, December 21st, the darkest day of the year, the winter solstice, has come and gone. So perhaps 88 to 90 is a new base for 100 or 105. Don't short the quiet market, a holiday favorite. Now, of course, we'll see come Christmas and New Year's what gymnastics the big boys have in store for us. But I kind of like the creeping bid, especially since I got completely cursed off last week for being constructive. That's okay. We love it when you curse me off. It's solid engagement. You don't get anywhere unless you're getting cursed off. So the consensus is that Bitcoin will be range bound next year. That Bitcoin's not going anywhere. Why? Well, because, you know, the ETF somehow dampens volatility. The options market dampens volatility, not doing the whole lecture. However, I think we need to reconsider that. In other words, if there's an ETF and everyone at Vanguard has access to it and pension funds need it, and maybe people would prefer that to MicroStrategy. There's a lot of buying pressure that can come into these ETFs all at once. Like, people are underinvested in Bitcoin. People are underinvested in gold, GLD, believe it or not. You know, when they start allocating 10% of their portfolio to these items, Bitcoin is this itty bitty little market compared to legacy. So I have no idea why everyone is saying, well, there's going to be no volatility next year. No, bro. Actually, there's going to be volatility next year that's going to blow your mind. You're going to have banks going. You're going to have governments going, going bad. And then the case for Bitcoin will be made. Question is, can you tolerate the volatility? Saying that there isn't going to be any volatility feels like the road to ruin. Now, speaking of the road to ruin, we can discuss what is going on in the Japanese government bond market, also known as bearish play world. The Japanese 10-year note is now well above 2%. Everyone is freaking out over there. The Bank of Japan made the wrong move. So they hiked rates, and I know the sound of that says, well, that can't be good. There's a lesson here. They tried to raise rates for credibility, and they lost credibility. When it comes to Bitcoin, when it comes to AI, and it comes to central banking, I got news for you. Toby Ward from the YouTube member area is right. Everything you used to analyze markets in the past, from at least a fundamental and macro point of view, you can, wrap up nice and throw it out the window. Yes, some things still matter. Valuations matter. I get it. But the only solution to what's going on in the Japanese government bond market is the same solution as to what's going on over here with either the labor market or $9 trillion in government refinancing. And that's QE. All right. And we'll talk more about QE later, but we have QE denial everywhere. The Fed is putting $45 billion a month into the system. They called it something else. They didn't call it QE. I discussed it on a live stream, and it's the lowest rated live stream in like 2 months. So nobody believes QE. And Arthur Hayes has written, well, watch out what happens to the market when they finally get it. All right. But I don't want to get too ahead of myself, right? So silver going up in 2 and 3% increments precedes a crypto repricing. Love that word. So gold goes up, silver goes up. Next year is probably a parabolic year for gold. Crypto has to reprice. In other words, the title of the stream is everything is pumping except Bitcoin. Tesla's pumping, silver's pumping, gold's going to pump, S&P and NASDAQ look okay. Where's the love? Well, guess what, folks? We'll get into collateral later, but like crypto is an alternative currency. Crypto as an answer to issues with governments and banks has all been forgotten about in lieu of whales are selling and old wallets moving and Binance order book hack. People forgot what's important. Number 5, LuxAlgo DeMark signals. LuxAlgo, and DeMark signals show exhaustion and some trend line breaks. Like Bitcoin is like slowly but surely moving through trend lines. The DeMark bottoms, the 13 bottoms, as they've been discussed early and often on this show, it's a legacy chart program. It's a kind of a classic buying signal. And the Bitcoin just starts grinding higher. It just adds more credibility to that bottom signal. Now, another myth, this comes from Raoul Paul, is that, institutional investors like make the market boring because there's less leverage. That's actually not true. They're very active in the options market, which is leverage or derivatives by nature, right? And if you think Bitcoin as a trading instrument is going to be dead, well, then you have another thing coming, because I think, leveraged perp trading, every time that there's a big washout, most likely that's an institution behind it. So there isn't going to be less leverage in the system. As a matter of fact, leverage is probably going to be rocket fuel if the market ever gets its footing and, as I said earlier, reprices. You reprice the market, you're going to bring in plain vanilla longs, that's Vanguard's customer base, and you're going to bring in the levered players like hedge funds, right? They've been washed out or short, okay? You know, they don't want to be underinvested if Bitcoin goes back to 105. So, you know, they might chase it with leverage. You know, the myths about institutions making Bitcoin an orderly market and Bitcoin is boring now. Okay, well, Bitcoin was boring this year, but the moment Bitcoin isn't boring, it's going to melt faces. A little bit like what's going to happen in silver and gold. Now, Bitcoin is also, you know, this digital gold narrative is pretty much consensus. I've been saying this for a long time, and thought leaders are saying it, that Bitcoin is a form of collateral. Like, would you use a Japanese government bond as collateral? Do you want to use a treasury bond as collateral when they have to issue and sell $9 trillion worth next year? I don't think so. I think Bitcoin is a great, as Raoul Paul says, a collateral of last resort. It's the best form of currency. It may also be the best form of collateral, which can help make it a reserve asset, particularly for corporations. Okay. Now, on that note, collateral assets, and I've seen this in treasury bonds once upon a time, collateral assets can appear boring. In other words, what the market really did in 2025 was put everyone to sleep. You know, either you got destroyed and you're lying in the fetal position, or you just said, well, I'm not doing Bitcoin because it's boring. Now, in case you think Bitcoin is boring, you should think about what happens if Bitcoin starts behaving. You should think about what happens if Bitcoin starts trading like Zcash, and Zcash and Monero start trading like memecoins and just exploding again, taking the whole sector with it. Secret, antivirus, Matrix, their privacy token that's coming out on its own blockchain. Good luck stopping the privacy narrative, right? The surveillance increases every day. In other words, these AI models, they're probably like 5 to 10 generations ahead internally. So like every time Google releases something, ChatGPT can turn around and counter release 2 weeks later. They go, oh my God, it's an emergency. No, it's not. They just push the next release out. You know, surveillance increases, demand for privacy is going to explode. And you can get Monero on Kraken and Zcash on Coinbase. Every normie in the world is going to be after that stuff next year. Matter of fact, you know, you might argue that if XRP goes dormant, that they could switch to Zcash. They could also switch to one of our other altcoins. I know the people in XRP don't want to hear that. I don't really want to hear that either, because I want XRP to be a version of fast money. But again, I'm ahead of myself on privacy. Okay. You know, these guys who are arguing for sideways, because that's the new fashion, right? Like if you were calling for 450,000 last year, or like us, where, you know, you just didn't get it right. Just didn't get it right. People can be wrong. Analysts can be wrong. Traders can be wrong. That's it. It's part of the business. But I don't understand how Bitcoin can be boring when monetary stability, sovereign debt, and government policies are about as unstable as they could possibly be. How can you tell me this is all going to be boring? Now, maybe the market doesn't want to acknowledge what they did on QE, but maybe they already have. Maybe that's why Bitcoin is not at 80K. Maybe that's why it has a grinding bid, because QE is out there and no one wants to get in front of a quiet market when they're pumping money into the system. Happy holidays. Zcash and Monero. Let's talk about it. One investment bank thinks total privacy coin market cap will be $100 billion by the end of next year. Now, we'll be giving Patreon various price targets for that. But here's what I can tell you right now. Right now, Zcash is about 8 billion and Monero is about 8 billion. The only coin, the closest coin worth over 100 billion is XRP. So 2 coins worth 8 billion, that's 16 billion for the big coins. Basically, you're talking about 6xing the market cap of the big coins or more. Because, you know, sometimes if they think it's going to 100 billion, maybe it goes much higher than that. If cryptocurrency in, you know, on some of our big GAN dates, which is coming out soon, what happens if it's much higher than people think? What happens if the big Kool-Aid targets from last year wind up being triggered on an event in February? Because I mean, I think by now everybody knows that something's going to happen, you know, in February. I don't know if that's complete consensus yet, but it's probably close, right? It's just a question of, you know, it's a question of how bad it is and how bad it is for Bitcoin. Okay. Number 17, the contrarian case is that regulatory pressure increases off exchange demand. No. I think, or they think, that DEX volume is going to explode, which would probably be the one thing that saves Solana, along with stablecoins and internet capital markets. Now, I'm not doing stablecoins today because it's kind of funny. Last year, everybody led with Bitcoin to 250K, Bitcoin to 400K. Now people kind of lead with, well, you know, Bitcoin can go to 250K, but let's talk about stablecoins on Solana. Now, stablecoins could be monstrous next year. Again, all the more liquidity coming into the system. I think the denial about how big that has to be is epic. Epic, right? Another one that's kind of simple is that capital can sometimes rotate from metals to Bitcoin once people realize that what the Fed is doing is permanent. In other words, when the Fed's doing $45 billion a month, that's not temporary. It's permanent, right? There is no more tightening. There is no more QT. That's over. You can't issue $9 trillion in government bonds and not push money into the system. Now, on that note, how do you know that the market, like, really does think it's QE? Like, I know it's designed to help the banks. I get it. I get it. But, you know, considering it's not QE, and I think I tried to show this last week, you know, this regional bad boy banks, right, with all the naughty exposure, boy, they had a really nice rally. You know, they went all the way back to their highs from the election. Huh. What do you know? So much for QE. You know, oh, it's not QE. Oh, it's not. Oh, yeah, it's just to help the banks. Oh, okay. That's why regional banks went up 25% in like a month. Less than that. Come on. It's QE. Now, Arthur Hayes notes rightly that, you know, the market currently doesn't get it. Like, I went on and on and on and on, and then I had to realize, wow, people don't get it. You know, everybody's obsessed with the Bank of Japan rate hike. I can tell you right now, from the way that bond market is now trading, the only thing that's going to stop that is they're going to have to come in and do QE. So congratulations, you're morons. You raised rates when you should have left it alone. Now they're going to have to come in and do QE, and we may have to help them. Otherwise, their bond market could literally blow up. I mean, if you want to know why silver's rallying, that's why it's rallying. What are they afraid of? That's what they're afraid of. And I don't think it's the yen carry trade. I just think it's this idea that a sovereign and their securities are just no good. I mean, let's put it this way. When altcoins go down, how negative do you get? Like, how much do you hate crypto? Honestly, when your bags just melt down, you go, I'm never touching this again. And then the video circulates that, you don't need crypto. You don't need the BS coin because the guy that told you about the BS coin won't talk to you now. You know what I'm saying? Okay. No one has thought that that could occur with government securities. I mean, everyone says it does. Everyone goes long Bitcoin, short the banks. Then they have to come in and save the banks. But people think that doesn't apply to Bitcoin, which again is massively underowned. Okay. The most dangerous assumption for next year is that nothing dramatic is going to happen because markets are pricing in calm, especially in equities, to a system that lacks calm. Why the hell do you think we tried to maintain our targets this year as long as we could? I mean, this thing is a powder keg. Silver's a powder keg. Silver is a powder keg. Banks are involved. Physical metal companies are involved. Sovereigns are involved. Somebody is clearly short and they can't stop it. Most likely big banks. That's a big problemo. That's not going to get solved with whatever the Fed is doing, $45 billion. They're going to need to do something way bigger than that. That thing blows through 70, currently trading 69 on December 22nd. Watch out. Watch out for the big Christmas move. Maybe the big Christmas move is precious metals out of Asia. Yikes. Remember, they're not closed for Christmas over there. That futures market, I believe, is going to be open. Okay, so Bitcoin back at 90. Interesting, because I kind of had that as like, well, if there's a weekly close below 90, I got to get out. Now, I did stop out of some stuff, but small stuff. I actually left the Bitcoin, which is kind of naughty because, should have stopped out of everything. But I was just like, you know what? I don't know that you have to get out of this thing unless it goes up to 105 and fails badly, right? That's kind of like the Feb 1 scenario where, something not so pretty happens in equities. Now, let's talk about equities, right? Everyone hates these guys. I absolutely hate these guys. Oh my God. It's so painful to watch that market go up while our market just goes down, right? It's unbelievable. But a group of guys called GMO, probably one of the original and smartest equity, it's like a giant fund company, but their research is always like, everyone's like, ooh, what's GMO saying? Really? So here's their top 3. Even great companies can disappoint when expectations are sky high. Speculation has inflated valuations. You don't say. For many firms without the market power or fundamentals of the top leaders, meaning they mooned, the mom, the dad, the brothers, the sister, they mooned the mother, the father, the brothers, the sisters, and the cousins over there in equities. Okay. Equal weight perspective reveals excess in rallying. Roughly 8% of all U.S. stocks trade 10 times. Their valuation is 10 times what they sell, 10 times sales, meaning they're expensive, and it looks like the 2000 and perhaps the 2020 bubble. Now, a note on this. As I said with the Bank of Japan, I think what these guys are saying makes sense. think a lot of hedge funds think the same thing. I don't think you should say this time is different. But with things like AI and Bitcoin, you have to acknowledge that you may have to look at different metrics. For example, personally, I think equities can go down and stay down, and Bitcoin can go down and come screaming back. Matter of fact, I don't know. I don't want to drink too much Kool-Aid because I don't think anybody would listen. But I'm wondering if the worst case scenario for Bitcoin, if it goes to 105, I mean, the worst case scenario is a retest of 80 in a complete debacle. Also wouldn't doubt that Bitcoin actually holds up and does okay because the big event could be something kinetic. You know, there's already talk about the Middle East. It almost feels like there's no surprise about it. Everybody thinks oil's going to 40. What happens if oil follows gold? I mean, you do realize, just as a side note, so you know, that, you know, an ounce of silver is now more valuable than a barrel of oil. Okay. So all you need is something to go on in the Middle East, and, you know, there's going to be an adjustment in oil. Currently, oil reflects the idea of completely lousy economic growth, along with the labor market and other things. Fine. Remember, when people finally see that perma-printing has to happen, in other words, when the stock market corrects, right? Like, I know you didn't probably understand 10 times sales, but speculation has inflated valuations, and even great companies can disappoint. You can see how all it takes is like one or two bad earnings releases or an oil shock or something weird to happen with AI before somebody goes, oh my God. I mean, we're all thinking it's sovereign bonds and banks, could be something else. What kind of case does that make for Bitcoin? In other words, everyone is afraid and they're buying silver, and everyone's afraid of Bitcoin because I think foreign actors, you know, broke the order book at Binance, and then all the miners from those countries, you know, the enemies of the United States, all their miners got shut down and they had to sell. So they broke Binance, and then they spent the next 3 months unloading on the market because they shut their miners down, right? Like, who could go in and break Binance? Like, the lack of curiosity in crypto. Like, I mean, something happens in the political arena and, you know, weird theories pop up like dandelions on your lawn. Something weird happens in crypto. We don't care. What do you mean we don't care? There's no such thing as a coincidence, right? I mean, if someone like Toby doesn't see it, then it's got to be something like a Six Sigma or borderline black swan event. No one is calling the Binance event that cracked crypto a black swan event. But really, when you break the order book at Binance, I mean, I know we've all seen Wix, and I know we get it, but do we? Like, that was a black swan event. Everyone's like, oh, wow, watch out for the black swan, bro. It's already happened. Which, you know, to be honest, accounts for the grinding bid. Like, I'm sure retail's going to get out at 90 and they're going to say, have a nice day. I'm done. I don't want to play anymore. Okay. Now, the top 10 altcoins that you forgot about, because, you know, can't talk about altcoins, right? Because it's nuclear. We don't want to talk about that. We want to talk about stocks where, you know, they've got one survey where, you know, on a scale of 1 to 10, people are like an 7.5 to 8 bullish at the retail level. Like, fear, greed, and equities has normalized, and an actual survey published by Bank of America shows retail about as bullish as you can get. Wow. GMO, an institution, going, you know, maybe this is a little stupid, and retail's going, yay. Unfortunately, that sounds a lot like us at this time last year. Unfortunately. So they're expected to trend. We're expected to be in a range. And I just say, flip the pancake on them. Flip the pancake. You got something negative that's supposed to happen in February? Fine, bring it on. What are you going to do? Crash Binance again, have everything go down 80% on a wick. Okay, well, you know, we did all that already. We did it already. Now, that doesn't mean something bad can't happen. Something bad can happen, but, you know, if you did like one final purge, like on the subject of one final purge, you know, we were all spun up, rightly so, about Michael Saylor's company getting kicked out of certain stock indexes, which would result in like $11 billion in market selling in MicroStrategy. And that's, of course, bad. Or is it? Because then Michael Saylor's stock would be cheap enough so that hedge funds would stop short selling MicroStrategy and buying Bitcoin against it. And then when that trade was profitable, they would dump the Bitcoin. You don't want that anymore. You don't want them doing that trade because when they make money on it, they dump the Bitcoin and the money leaves the system, which is what happened all last fall, all during the fall. So, you know what? It would be unpleasant for Michael Saylor. It probably would cause a downtrade in crypto, but you know what? It would finally end. In other words, this trade where, you know, MicroStrategy versus Bitcoin, just stop it. And you know what? A lot of funds who can't do the Bitcoin ETF could not only own, you know, Michael Saylor's, you know, kind of his bonds that he issued, but if they destroy the stock in January, they might want to come in and buy the stock. People who want more Bitcoin exposure. I mean, okay, so they dump it from the index. You know, you don't know this, but you know, the Dow Jones Industrial Average only has 20 stocks. You know, when they put a stock in the index because it's all hot and popular, sell. When they kick a stock out of the index because it hasn't performed well, buy because it's down. It was good enough to get in there, but for whatever reason, it's down. It gets kicked out, you buy it. So if they kick Michael Saylor out, yeah, of course, MicroStrategy is going to go down a lot. Now, another funny thing is that a lot of the people who are bullish, like they're bullish Solana, they're bullish Bitcoin, but they also think that, you know, somewhere in here, like a big digital asset treasury companies are going to get forced to liquidate. Now, I understand you want to qualify your views. Maybe you want to have one bearish thing. You know, my bearish thing is to kind of question Solana because of the lawsuit. I hope I'm wrong. Digital asset treasury companies would probably blow up if Bitcoin went and retested the 2021 all-time high. Okay. But it seems to be very fashionable to trash these digital asset treasury company plays. Like, you know, everyone's probably after Tom Lee in Ethereum, right up until the point where they have to do trillions upon trillions of stable coins. And a lot of that gets done on ETH. So, yeah, I'm sure somebody will get liquidated or somebody got liquidated. And maybe if there's an issue in February or an issue in, you know, Rectember or October next year, should that be our focus, though? Right? It's like, it's not what the small fry players are doing. I think the issue is for crypto, what happens if Michael Saylor's stock gets wrecked and then you have like a generational buying opportunity because nobody is ever going to be able to buy the quantity of Bitcoin that he has. And speaking of that, I continue to think an ongoing catalyst for Bitcoin is when the Japanese government buys Metaplanet and offers JGB holders some Bitcoin as a part of their interest payment. Trust me, they're going to have to get inventive because working out of the old playbook, yeah, they're getting smoked. It's not working out. 10 altcoins you forgot about. Zcash. I won't let you forget about Zcash. Monero. Don't forget about Monero. It's on Kraken. I know everyone's scared of Monero, scared of what happens if you buy it. If it goes to 1,000, you'll be less scared at 1,000 than you were at 400. Monero is one of the top performing cryptos. They smashed it all the way down to 150 on some kind of 51% attack, and they couldn't kill it. Ethereum, the boring altcoin that isn't. JP Morgan does a money management fund on ETH. Stablecoin volume is going to be in the trillions. In the trillions. Okay, how big is stablecoins predicted to be? Galaxy Digital. They think next year stablecoins will be bigger than like ACH transactions. You know, like your paycheck, your direct deposit, or maybe even, you know, things like Zelle. Yeah, stablecoins next year are predicted to be bigger than that type of stuff. You got to think about what chain that's going to be on. It could be on Solana. It could also be massively on ETH, and ETH could be massively underpriced. The problem with these big layer ones is no one wants to secure the network. No one wants to stake it because they can't get price appreciation. Okay, so what happens if they do get price appreciation? They're going to buy ETH and stake it. They're going to pull the supply off the market. So a rally in ETH could feed a rally in ETH. Raoul Paul's favorite, SUI. If Solana gets sued, the door is open for SUI. Whether this pump.fund FUD is or isn't important. SUI is now in play. Like SUI's narrative is not Solana. There has to be more than one of these things. There has to be. Hyperliquid. Leveraged trading. Right? Kind of like, you know, almost like the new edgy Coinbase. Coinbase used to be like an edgy, risky play. Now it's considered like blue chip, Goldman Sachs of crypto. Okay, that's great. But everyone's, maybe people didn't forget about Hyperliquid, but you know they forgot about Chainlink. I saw a guy talk about Chainlink the other day. He said, you know, Chainlink can do a lot of things that XRP can do. And Chainlink may have an advantage because the banks don't have to own Chainlink to get these benefits that XRP can provide. To get the benefits of XRP, you have to own XRP. Now, I'm sure some of that's going to happen because XRP is a fast form of money and they have an ETF, which means Ripple doesn't have to sell in the market. They can sell to the ETF to raise money. They do have a company of 1,000 people. That said, what happens if Chainlink is as good or better than XRP? I know, complete and total sacrilege. Everyone just unfollowed, but I'm trying to bring Chainlink to your attention, particularly when it comes to tokenization of assets. Uniswap, now as I understand it, is kind of like its own ETH layer 2. Uniswap, Maker, now Sky, Aave, which is also on the list. These are DeFi protocols on ETH that make money. Arthur Hayes says he was switching from ETH back into these DeFi protocols that make money. He actually got out of them for fear of, you know, a massive downside nightmare. Now he's going back in. You forgot about Aave. You forgot about Uniswap. And you probably forgot about Render. Right? Because there's a real use case. It's multi-coin capital. And I know all this AI stuff in crypto got completely destroyed this year, which was very unfortunate because, you know, we kept pounding the table on 2 or 3 coins. But again, folks, value investment, how cheap is it? Cheap, right? Everyone bullish equities and everyone in crypto is careful, careful, careful. I'm not advocating for stupidity. But I'm advocating that whatever everybody was saying last year at this time didn't work out. So I think it applies to next year, not obviously this year. This year was like the disappointment years, like 2019 or 2018, right? All coins like destroyed. This is a disappointing year. It was a bear market in all coins, flat out. Every big rally got sold. Every single one. And then it was down only. So, you know, I'll end with what I always say. Cycle? What cycle? I mean, some guy the other day said, Bill, the cycle's over. Shut up. Goodbye. I'm like, okay. You know, if it's over, it's over. But if it's not over, how high can it go? Especially when everyone thinks it's over or in a range, or, you know, it's not safe anymore to say 350. It's not safe anymore. People are just like, yeah, shut up. You're a moon boy. Okay. You know, I read the top 20, which came from a couple different thought leaders, put into my language for the market update, reminding you to hit the like button, to check out Patreon, where we have very sophisticated GAN models and GAN work coming out, along with the YouTube member podcast, which will happen tomorrow. That's it for today. We'll see you tomorrow.